Have you ever wondered which is a better investment for retirement, gold or silver? It's a question that has crossed the minds of many, especially those who are keen on diversifying their retirement investments. And rightfully so, as diversification is a key aspect of a sturdy retirement plan. Now, when it comes to diversification, precious metals like gold and silver often pop up. They've been treasured for their value since ancient times, and even today, they hold a special place in the world of investments. But which of these two shiny options is the better choice for your golden years? Is it the timeless allure of gold that has been a symbol of wealth and prosperity throughout the ages? Or is it silver, often dubbed the common man's gold, that takes the lead? It's a fascinating debate, one that we're about to dive into. In this video, we will delve into the pros and cons of investing in gold and silver for your retirement. Scene script. First, let's examine the advantages of investing in gold. Gold, the timeless symbol of wealth and prosperity, has a long-standing history of stability. It has been used as a store of value for thousands of years, transcending cultures and civilizations. This historical stability makes it an attractive investment for individuals seeking to safeguard their retirement funds. One of the key advantages of investing in gold is its performance during economic downturns. When the stock market is in a tailspin, gold often shines the brightest. This is because investors typically turn to gold as a safe haven asset during times of economic uncertainty. It's not that gold necessarily goes up a lot, but rather it tends not to go down, providing a comforting level of stability when other investments are fluctuating wildly. Another pro of investing in gold is its value as a hedge against inflation. Inflation erodes the purchasing power of money. However, gold tends to maintain its value over time even as the cost of living increases. Consider this, 100 years ago, an ounce of gold could buy a fine tailored suit. Fast forward a century, and that same ounce of gold can still buy a fine tailored suit. This ability to preserve purchasing power makes gold a popular choice among investors looking to protect their wealth from the effects of inflation. Moreover, gold is a tangible asset. You can hold it in your hand, store it in a safe, or keep it in a deposit box. This tangibility gives many investors a sense of security that paper investments like stocks and bonds simply cannot offer. Finally, the global demand for gold, driven by industries such as jewelry and technology, helps to underpin its value. Even as we stride forward into the digital age, the demand for gold remains robust. In conclusion, the benefits of investing in gold are manifold. It offers historical stability, performs well during economic downturns, serves as a hedge against inflation, and provides tangible security. The global demand for gold further supports its value. Gold has proven to be a safe and reliable investment over the years, making it a popular choice for retirement portfolios. However, investing in gold also has its disadvantages. Let's dive into some of the cons that often surface when we talk about gold as an investment. Firstly, gold lacks yield. Unlike stocks or bonds, gold doesn't pay dividends or interest. It's a dormant asset that sits in your vault or safety deposit box, hoping for its price to rise over time. This lack of yield can be a significant disadvantage, especially when interest rates are high and other investments offer attractive returns. Secondly, storing gold can be quite costly. You can't just shove gold bars under your mattress and call it a day. It requires secure storage, which often means renting a safety deposit box or a vault, both incurring recurring costs. And let's not forget about insurance. Insuring your gold against theft or damage adds yet another layer of expense to your investment. Lastly, the price of gold can be highly volatile. Yes, gold is often seen as a safe haven during economic downturns, but its price also fluctuates based on various factors such as geopolitical events, inflation rates, and currency values. This volatility can lead to significant price swings, which might not be suitable for investors with a low-risk tolerance. So, while gold can certainly be a part of a diversified investment portfolio, it's essential to weigh these downsides against its potential benefits. While gold can be a safe bet, it's not without its downsides. Now, let's look at the benefits of investing in silver. First off, silver is more affordable than gold. This makes it an attractive option for those just starting out in precious metals investing, or those with a smaller budget. You can start accumulating silver coins or bars without needing a large upfront investment. This affordability also allows for more flexibility. You can buy or sell in smaller increments, which can be particularly useful in a volatile market. Beyond affordability, silver has a high industrial demand. It's used in a wide range of industries including electronics, medicine, and renewable energy. Silver's unique properties such as its conductivity and antibacterial qualities make it indispensable in many areas of technology. This industrial demand helps to support the price of silver and provides a level of stability. Now let's talk about potential returns. While silver is generally more volatile than gold, this can work in an investor's favor. When the price of silver rises, it often outperforms gold. So if you're willing to weather the ups and downs, silver can provide impressive returns. Another thing to consider is the gold to silver ratio. This is the ratio of the price of gold to the price of silver. Historically, this ratio has fluctuated greatly. When the ratio is high, silver is undervalued compared to gold. This can provide an opportunity for investors to buy silver at a relative discount, with the potential for significant gains if the ratio narrows. Lastly, silver can act as a hedge against inflation. Like other precious metals, silver retains its value over time. So, during times of economic uncertainty or rising inflation, silver can provide a safe haven for your wealth. In conclusion, silver's affordability, industrial demand, and potential for high returns make it an attractive investment. It's also a useful hedge against inflation and market volatility. While it's not without its risks, silver can be a valuable addition to a diversified investment portfolio. Silver, while often overlooked, can offer significant benefits as part of a diversified retirement portfolio. Despite these advantages, investing in silver also has its challenges. Now let's delve into some of the potential pitfalls of silver as an investment. Firstly, silver is known for its volatility. Unlike its golden counterpart, silver's price can fluctuate wildly, which can indeed lead to high returns, but it can also mean substantial losses. This volatility can be nerve-wracking for investors looking for a stable investment to hedge against inflation or economic instability. Secondly, silver has less liquidity than gold. In simple terms, it means it can be harder to sell your silver when you need to. This is because the market for silver is smaller than that of gold. So if you're considering silver, it's worth bearing in mind that it might take a little longer to convert your investment into cash compared to gold. Lastly, silver is susceptible to economic downturns. In times of economic crisis, investors often turn to gold as a safe haven. Silver, on the other hand, is more tied to industrial demand, which can slump during an economic downturn. This can lead to a decrease in silver prices just when you might be looking for stability. While silver can offer high returns, it also carries a high level of risk. It's important to weigh these factors carefully before deciding whether silver is the right investment for your retirement portfolio. So, which is the better investment for retirement, gold or silver? As we wrap up our discussion, let's revisit the key points we've explored today. We delved into the advantages of investing in gold, highlighting its historical stability and its role as a safeguard during economic downturns. Gold has proven to be a reliable store of wealth over centuries, often maintaining its value even when other assets falter. On the flip side, we also touched on the limitations of gold investment, including its relatively high entry price and the fact that it doesn't generate dividends or interest. Switching gears, we examined the potential of silver as a retirement investment. As a more affordable precious metal, silver offers a lower barrier to entry, making it accessible to a wider range of investors. It also has considerable industrial applications, which can drive demand and potentially boost prices. However, silver isn't without its drawbacks. Its market is smaller and more volatile than gold's, which can lead to sharper price swings. But here's the crux of our discussion. The choice between gold and silver isn't a one-size-fits-all answer. Your decision should be guided by your individual risk tolerance, your investment goals, and the prevailing market conditions. Are you looking for a safe haven asset to preserve your wealth? Gold might be your go-to, or are you willing to take on a bit more risk for potentially higher returns? Then silver could be an appealing option. And let's not forget the importance of diversification. Whether you're leaning towards gold or silver, it's crucial to have a mix of assets in your portfolio. This can help spread risk and potentially enhance returns over the long term. Ultimately, the choice between gold and silver for your retirement investment depends on your personal financial goals and risk tolerance. It's always wise to seek professional advice before making such decisions. Remember, diversifying your portfolio is key to managing risk and ensuring a secure retirement.